3 mars. Vi vaknar till ett försurat börshumör, inte minst efter kraftiga nedgångar i Asien. Med mig för att diskutera börsen och utsikterna i konflikten har jag Christian Nolting. You're the global CIO with Deutsche Bank. It's wonderful to have you here in Stockholm. Warm welcome.
Pleasure to be here.
And I appreciate your timing. This is quite a dramatic morning. We had a firm closing, an optimistic closing in American Wall Street yesterday, but it soured considerably in Asia overnight. Your thoughts on that?
Yeah, well, I honestly was a bit surprised that the US even managed to be positive yesterday. Normally, you would expect some downside in the market. So I think the market is waking up a little bit to reality, if I may say. So you see Asia coming down and futures also being down, which is, I think, in a geopolitical event, not so surprising.
It's not so surprising. My guess is that we've had a lot of buy the dip success. This strategy has worked so well on Wall Street for a long time. Maybe that explains some of the optimism.
Yeah, I think so. So I think there's optimism in the market that the conflict won't last too long, which couldn't be the case, right? So we don't know at this point in time. But buying the dip was always successful, so probably markets is doing that. But I think in geopolitical conflict, you would not expect this to last 1 day or 4 days.
No.
So it will be a bit longer. And even President Trump said it will be a bit longer. And I think because of this, you will see heightened volatility now for a certain period of time.
My second guess would be that Venezuela gave us an example of how quick conflicts could be resolved when you applied that to Iran, which is obviously a bit too optimistic.
Yeah, I don't want to comment on military strategy because I'm not familiar with that, but I think it was a complete different target in Venezuela than Iran, right?
One thing that surprised me, the Nikkei was down 3%, dramatic enough, of course, but the Kospi, the Korean stock market, is down well over 7% as we speak. Any thoughts on the magnitude of that particular market?
Yeah, I think what you see in such geopolitical events normally is that the winners are sold first. And if you look at the performance year to date, even South Korea has done extremely well. There are some specific stocks which are doing extremely well. They are sold, and that's why the index is also substantially down.
But you mentioned SK Hynix in this context just for...
Yeah, but exactly. But I think that's something you need to take into account, right? So the more the performance up, probably more you see volatility and sell side pressure at this point in time.
It's an interesting point. Could I apply that to yesterday in Europe? We saw banks, for example, coming down. It was not clear to me why this happened, but they're obviously the winners of last year.
Yeah, exactly. So you saw extremely positive performance of banks, but of course, whenever there is uncertainty about the economic outlook, of course, you will sell banks first because what does it make to the economy? And of course, banks are cyclical to the economy. So that's why I think it's a normal reaction. But it doesn't change, by the way, our outlook for banks longer term. So from that perspective, we are still positive on financials in general.
But they are winners and they're cyclical in nature. So as a Swede, I could take that into consideration. We have a lot of cyclical industrial companies as well. As do the Germans, of course.
Yes.
I want to come back to Germany soon, but I also want to mention that we had some reports on strikes against the US embassy in Riyadh overnight and a bit of a bigger magnitude in Iranians' willingness or ability to strike back at seemingly surprising targets for me as well.
Yeah, I would say in this war, don't be surprised, if I may say, right?
Yeah.
You see actions from either side, and so it will be very volatile. And again, it's not a question of days. I think it will take a bit longer, and that's also what was confirmed by the US side. So I think we will continue to see that happening, unfortunately. But it will create volatility in markets. So I'm not surprised by this kind of reaction in the markets.
We started seeing volatility in oil markets, obviously. VTI is at 73, but Brent oil up to around $80 per barrel overnight. I would have expected even more, given the drama of the situation, the gravity of
I think if you look at the curve, right? So if you look a little bit out, the oil price is coming down already. So we have this massive backwardation in the curve. So the market is obviously expecting that not to last too long. And I think that also limits some prices. But what we need to do is, I think, to look at the Strait of Hormuz, because it's a major, let's say, facility to transport oil and gas, by the way. And so I think that's really a very important point, what's happening there.
Another important aspect of that point seems to be the ability or the willingness to keep the strait closed for a longer time. I mean, Iran supposedly need the money, and we're not sure if they're capable. Do you have any thoughts on the time dimension here?
Yeah, look, I think I'm not so sure it's in the interest of Iran to keep it closed because, as you rightly said, right, so that's also their revenues if they export oil, especially to
Yeah.
Asia, by the way, China, Japan, South Korea as well. So I think there are some statements as well that they Chinese are saying, let's try to keep it open. So I think there will be some discussion, but I think it really depends how long is it really tough to go through. I think it's not officially closed, but of course, insurance to go through, premium goes substantially up, understandably so. So from that perspective, I think that's really important to watch what's happening there. I think that's the most important. If you want to watch this unemotionally, you need to look at energy prices, and that
Yeah.
really depends a lot on the Strait of Hormuz.
I mean, sadly, this is an unemotional and emphatic business when we look at markets in a terrible
Yeah,
situation.
I know, but that's the job a little bit. So I think it's really important to take this out, which is not always easy. But I think if you want to have to look through a little bit what's
Absolutely.
happening, that's really crucial.
I agree. This will reach Europe in the sense, well, oil prices will reach us, but also gas prices, obviously. And this was quite dramatic since Qatar closed the facility
Yeah.
yesterday. We saw an incredible spike up around 40%.
Yeah.
Thoughts on that?
Yeah, first of all, I think it's a massive spike. It has repercussions, and especially Europe after the Ukrainian war is still dependent on gas. They use LNG, right, for this,
Yeah.
and Qatar is a main producer for that. So if you close the facility, then of course prices go up because now Europe needs to buy that in the spot market, and it's in complete competition with Asia on this. So I think no surprises, especially Europe prices go up. Now Europe is also getting LNG from the US, but it's quite close to max capacity. There's also some LNG coming from Norway, which is also high on capacity, but there's some maintenance work done at this point in time, and that will stop. Then there's some capacity freeing up. But for the time being, I think it's a massive spike because if you close that facility as a main exporter, then there's some reaction on the price.
I think there's also a spike in the learning curve here. We learned the hard way about energy. I mean, the Germans should know about nuclear energy, of course. We bought energy from Russia through Ukraine, and now we realize that we're buying energy that comes through Qatar. I'm not sure if everybody was aware about the political situation here.
Well, somehow it's always related, right? So, but of course, you need to diversify your energy as well. It's not so easy, not done in a day, obviously. And I think in Germany, especially, also gas storage is at relatively low levels these days. It's honestly a quite tough winter, long winter. And then, of course, the question is about restocking. I think now, obviously, it's March, so it's getting better. That's not starting at the beginning of winter, which is good news, but then restocking is also an issue. But if Norway is able to deliver a bit more, then it should be fine over the summer.
Should we worry in Sweden for higher electricity bill? I mean, we have our own power sources, but we're still impacted by gas prices here.
Yeah, I think that really depends on how long is that conflict happening, how long does it last. I think we have been calculating if it's, say, 4 to 6 weeks, you see energy prices substantially higher. That honestly can still be digested. Yeah, of course, you see inflation going higher. I think if it's longer than 6 weeks and goes into 3, 4 months, then you would see an impact on inflation, on energy prices. And of course, that's a negative outcome then.
I want to talk more about that. I just want to mention that coal prices have surged more than 8% as well. This is obviously a follow-up on heating, alternative heating costs coming up. But you German, we've been waiting for the German recovery, the industrial recovery in Germany. We saw PMI spike up a little bit. We saw IFO positive signs. And now there's a potential headwind, obviously. Higher energy costs will be a bad thing for the German industry.
Yeah, that's true. But again, it really depends on how long does it take in the Middle East. As I said, if it's 4 to 6 weeks, then it should be digestible. If it's longer, then you have higher energy prices. In general, though, I have to say we are a bit more positive on Germany because now there's a lot of spending going on. And so this fiscal spending also eventually will lead up to higher growth rates. There's also a positive effect, if I may say, there's more working days this year than last year because holidays are more on a weekend, and that has implications on the economy. We should not forget about this. So we are quite confident. Then again, if it's not a month-long, let's say, war we have in the Middle East, that we see growth from the German economy. That's positive.
So we return, this is the same conclusion as with the banks. We stay at the positive scenario as long as it doesn't get too prolonged or too expanded?
Yeah, I would say so. Energy prices is the main driver
Yeah.
from that perspective. And so which sectors are impacted? I think if energy prices would stay higher, you see higher energy prices, you see consumption to go down. It's not that the whole economy then massively slows, to be very honest. Yes, you have to deal with that, but you also saw that the economy could be dealing with that in 22 and 23. So it's not immediately going into a recession where it would be then negative. But that's, from my point of view, not the case. It
How
will
about
cause some growth if you have higher energy
uh
prices, but we are still not forecasting a recession.
this is a region of the world that just stands for roughly 2% of global GDP. So the impact economically should be limited to what we just talked about, energy prices. Is that a
Yeah,
correct
on
assumption?
the global economy. But if you really would see energy prices higher for
Yeah.
quite a long time, of course, then you cannot neglect some implications there.
I noticed that Philip Lane, obviously the chief economist within the ECB, discussed this very dynamic. A prolonged conflict would be a driver of inflation. You
Yeah.
mentioned inflation. I understand that the answer would be somewhat the same as when I talk about economic impact, but if it goes on for longer, also the inflation risks come.
I mean, that's what you saw in markets yesterday as well, right?
Yeah.
While equities in the US were slightly positive, you saw bond yields rising. You saw that in Europe happening as well. And of course, here the market is looking at the inflation. And there you can see that happening. By the way, we've always been a bit cautious that inflation is not going down so quickly for several reasons. You saw also electricity prices staying elevated as a function of AI as
Yeah.
well. Let's not forget about this. And that's why there's a lot of focus on inflation. And if inflation stays higher, then the Fed is not so easy for the Fed to cut. We were not thinking that the ECB would cut, so then I think any cuts are ruled out if it stays longer. And from that perspective, it really has implications. And that's why we look at the energy prices transition via inflation. And I think that's the key aspect here.
Key aspect to watch. We booked this interview a couple of days ago before this war broke out. I imagine we would have been talking about AI if it wasn't for
Yeah.
Iran. Any thoughts on market's ability to focus on one thing at a time? Do we forget about something very important while we talk about war and attacks in?
I think the market is very rational, to be very honest. You also saw that topic, software as a service, is being discussed. I've not seen a massive recovery at this point in time, so the market will look into these sectors as well. I think, honestly, I'm always asked, is that the end of the boom in AI?
Yeah.
We think there's still structural change. And from that perspective, I'm saying it's probably healthy that some sectors are thought of what's the consequences. If the market would not do that, you go to, let's say, a massive upside, and then you see a big bust at one point in time. So I think the market, say, discussing who is impacted and who is profiting from that, I think is rather healthy, to be very honest. And we still think there's a lot of structural change coming from the AI side. So we don't think it's already done now. There's a lot of investments happening, but not always in the same sectors, right? It's really differentiating. And by the way, this is also continuing maybe a bit under the surface because everyone is looking at in the Middle East, but that's still what the market is discussing.
So we're hoping we can get a reasonably limited conflict, and then we can go back to talk about AI disruption.
It will still happen beneath the surface, I'm sure. Yeah.
We learned a few things though. We learned that US dollar is still the go-to currency when things get really dramatic, which I think is maybe not totally unexpected, but interesting in a way. I thought.
Yeah, but so I think that's not a surprise, to be very honest. And we saw the dollar strengthening yesterday. Maybe the bigger surprise was on treasuries because we didn't see yields coming down. But that, I think, is the function of energy prices going higher, the inflation discussion we just had.
Yeah.
If you look at the dollar, I think longer term, yes, the dollar's importance globally is slightly going lower, but we are not forecasting the dollar to massively be weaker. Because think of it, if the currency is massively weaker, you import inflation again. And that's not what the US, I think, is wanting. Because also President Trump talks about affordability. It's a big topic now in the pre-campaign for the midterm elections, which seems far away in November. But I think in the first half, he needs to come up with some measures. And if you think of the consumer expected inflation in the US is still high. So, and that's why if you have a massively weaker currency, that doesn't help from that perspective.
Well, my impression is that the president sometimes wants things that doesn't naturally go together in the economy. He wants a lower dollar and he wants low inflation. He wants low rates and low inflation.
Yeah,
He wants a war and low gas
yeah.
prices. Sorry.
But sorry, I didn't want to interrupt. But so I think it's for the currency is always a question of speed. If you have, let's say, weakening over time, then companies can adjust. If it's super fast, then it doesn't work. And then it's a massive implication. I think it's really a question of how fast that goes. And if you do steadily, then probably it's not that bad as you do it very fast.
That's very interesting. So we have a question of time in terms of the conflict and a question of speeds in terms of currency moves.
Yeah.
Any thoughts on the Swiss franc? Also a favorite.
Yeah, of
these
course.
days.
You have seen now over time that a lot of money is also going to the Swiss franc. You saw some strengthening there. And of course, the Swiss National Bank is not liking to have such a strong currency, to be very honest. But you've seen that safe havens, right? So working it was going into the dollar. You saw Swiss francs over the last weeks. You saw gold going up.
Yeah.
That was even before that conflict was happening. So I think that trends are still there. So we shouldn't forget about this.
One last thing we would have talked about if it wasn't for the war. Apart from AI, we talk about credit stress, about defaults within the private lending space. Is this still a real issue? And is there a transmission risk from higher gas prices, for example, from energy shocks or the market moves that we see today that should make us more worried about the credit space?
Yeah, I think it's always a function of the exposure these companies have, right? So software as a service, software in general was a discussion point. We've seen performances of some companies substantially go lower, even though there was not so much exposure. So I think what we're seeing is the market is selling first and asking questions later. That's not an unusual phenomenon, by the way. Same with what you said on energy, right? So you should look what's the exposure, but of course the market would look into this first and then look at the fundamentals a bit later. So I wouldn't rule out there's further volatility to come, but I have not seen that there's so much exposure now to energy that this causes another crisis.
Very interesting. And a key point, I think, the market sells first, asks questions later. You remain constructive on banks, German economy. So there should be some opportunities created in the situation.
We think so, because if you look at geopolitical events, they have always played out eventually to be buying opportunities if, and there's a big if, there's no recession following.
All right.
So you've seen that Yom Kippur War, oil prices high as 73, right? Recession following. Afghanistan War, 2001, recession following. But that was not because of the war. We know the US economy was already weak. We had the internet bubble to burst. The question is, eventually, do we go into recession? With all the fiscal spending we are seeing right now, I think in the US, a recession, I think is quite unlikely, to be very honest. Also, Europe is at fiscal spending, a recession is unlikely. So from that perspective, from the macro side, I'm constructive. And then we need to see how long this conflict really lasts. But I don't think we go into a recession globally, Europe, US. And from that perspective, eventually, I think it's a positive outcome.
Can I quote you, buy the dip?
The question is when buying the dip. Yeah. So, and I think timing wise, that's honestly very, very difficult. So I think the best way to approach these markets is diversification.
All right.
And you need to see, can you stand the risk which is happening right now? If not, then you should ask yourself, is that the portfolio I want to have? But you should be able to take some risk, and then it helps. But to trade geopolitical events is super tricky because you never know when it stops and then the market will shoot up. So I think diversification is important, and what's the risk you have in the portfolios, and then you should be able to go through it.
All right. And I imagine a lot of people on Wall Street found out the hard way yesterday of the risks going into early. Finally, a word on diversification then. Different asset classes or just different geographies?
Both. And we have said already last year the market was very narrow. Some stocks only performed very well, some didn't. By the way, also on AI. And now we are seeing the market is broadening. That honestly is healthy. If the market is not so concentrated, but it's broadening out, that helps. But on diversification, it's asset classes, it's sectors, and it's regions.
Somebody told me that the market leaders slowing down seems healthy. Obviously, you need a shift. But we also saw that in the year 2000 before the crash. Any last reflections on?
Yeah, if you look through what happens there, I think the market in the so-called internet bubble was not looking at earnings so much, but at future revenues, so that was extremely high. I think that's really different right now because I've not seen so many euphoric investors. the market investors are asking, is that too much? Where are the cost of AI? Is that well invested? So I think it's a bit different environment. People asking, does it all make sense? And from that perspective, I think we are not in a comparable state to 2000.
I hope so as well, and I hope you're right about a recovery waiting after this tragic and unfortunate war, but hopefully a good time for markets ahead. Christian Alting, very nice to have you here in the studio. Very insightful. A pleasure to
Thanks for
meet you.
having me.
Och till er som tittat, tack så mycket. EFN är tillbaka väldigt snart, 8.55 med Börsfrukost. Missa inte det.